Hello, ladies and gentlemen. I hope you're fine wherever you are. I am the Acca tutor, and in this video, we are going to venture into International Financial Reporting Standard number 5, that is non-current assets held for sale and discontinued operations. This is part of our week 7 work for our students who are studying with us the Acca financial reporting paper. So, ladies and gentlemen, that's my name on the screen, and those are some of the qualifications which we have managed to attain so far, and the conduct as well as the email. Okay, without wasting much of your time, I think we can proceed. Don't worry about the background. Okay, I'm staying in one room. Okay, yeah, I'm staying in one room. I have just um, moved to another city, so you know, I'm still occupying this accommodation as a bachelor. So I'm yet to, you know, finish the room. Okay, but I hope in the quickest possible time. Okay, in the quickest possible time, I will do uh, finish up the room and make it a bit presentable. Okay, anyway, let's just forget about that. Okay, it happens, it's part of life. Let us move on. Now, let's talk about the background of Ifrs 5. All right. Ifrs 5 non-current assets held for sale and discontinued operations was published in 2004. The objectives of the standard are to require entities to disclose information about operations which have been discontinued during the accounting period, and to improve the reader's ability to interpret the results and to make meaningful projections. So you need to know the results of an entity from its continuing operations as well as from those operations which have been discontinued. So basically, that's what the standard is all about. Okay, um, let's discuss about the key terms which are significant to this standard. Okay, I think the first term we need to look at is discontinued operations. What do you mean if we we talk about discontinued operations? Discontinued operations. Okay, this standard here talks about something else that is important. Okay, this one is a component. Let me just try to locate the definition from the textbook here. So you can see from the screen there that a discontinued operation is a component of an entity that has either been disposed of or classified as held for sale, and A represents a separate major line of business or geographical area of operation, okay, is part of a single coordinated plan to dispose of a separate major line of business or geographical area of operations, or is a subsidiary acquired exclusively with a view to resale. Okay, when we acquired the subsidiary during the year, our idea was to just resell the subsidiary and nothing else. Okay, so it's actually going to be considered a discontinued operation. What about a component of an entity? Okay, uh, operations and cash flows. These are operations and cash flows that can be clearly distinguished operationally and for financial reporting purposes from the rest of the entity. Okay, because in our definition we say that a discontinued operation is a component of an entity that is either been disposed of or is classified as held for sale. So there was actually need for us to define the component of an entity. Okay, and we are saying these are operations uh, and cash flows that can be clearly distinguished operationally and for financial reporting purposes for the rest of the entity. That is from the BPP text. Okay, BPP start text. All right. Um, it's cited from the standard itself, that is International Financial Reporting Standard number 5, Appendix Alpha. Okay, Appendix A. All right, let's continue with our uh, business of the day. So these are the major definitions which we needed. So we talked about the discontinued operations, we talked about the component of an entity, component of an entity. There is also this particular definition which is also going to hound us, a disposal group. All right, a disposal group. This is a group of assets to be disposed. Okay, to be disposed of by sale or otherwise. Okay, together as a group in a single transaction, and liabilities directly associated with those assets that will be transferred in the transaction. Okay, that's a disposal group, a group of assets which are going to be disposed of or by sale or otherwise, okay, as a group in a single transaction. What about an asset held for sale? Asset held for sale. Okay, this is the carrying amount. All right. Okay, or rather, let me just say this is the classification of a non-current asset. Okay, when its carrying amount is going to be recovered through a sale. Through a sale and not from continued use. So what are we saying? Remember, we have covered the impairment of assets, where we say that an asset is impaired when its carrying amount is going to be higher than the recoverable amount. Okay, when the carrying amount of an asset is higher than the recoverable amount, then the asset is impaired. And we say that the recoverable amount is the higher of the fair value less cost to sell and value in use. All right. But now we are now saying an asset is considered to be held for sale if its carrying amount is only going to be recovered from sale of that asset and not from continued use. Okay, or rather than from continued use. So this is the definition, and we need to understand it from the word go. So when an asset has been classified as held for sale, then we are saying its carrying amount is only going to be recovered from the sale of that asset. So we need to consider what people are offering rather than from continued use of that asset. Okay, now let us see what are the criteria to be used for us to say the asset can now be classified as non-current asset held for sale. The asset or disposal group must be available for immediate sale in its present condition, subject only to usual and customary sales terms, and the sale must be highly probable. For us to be convinced that these conditions are actually what is obtaining on the ground, we then have to go a step further and assess the situation. Number one, the appropriate level of management must be committed to a plan to sell. So which means the board should be highly motivated. The board of directors should be highly motivated to the sale. Okay, we do not expect this decision to be hammered maybe by one non-executive director, while the rest of the executives are not committed to the plan. Then we can't actually be convinced that the appropriate level of management is committed. Number two, an active program to locate a buyer and complete the plan must have been initiated by year end. So we expect to see evidence of serious marketing for the sale of this asset to be taking place. Otherwise, we won't be convinced that the asset should be held for sale. Number three, the asset or disposal group must be actively marketed for sale at a price that is reasonable in relation to its current fair value. So we expect if the fair value of the asset is 1 million, the price for this particular asset at which it is being sold should be at least lower than the fair value. Okay, should be equivalent to the fair value or lower. Okay, otherwise we won't be convinced that the asset should be held for sale, should be held as an asset being held for sale. Okay, number four, the sale should be expected to qualify for recognition as a completed sale within 1 year, that is 12 months, from the date of classification as held for sale, subject to limited specified exception. Okay, so we are simply saying that there should be a reasonable ground that this asset is going to be sold in the next 12 months. Okay, there should be some evidence that. So if we are then being told that for us to actually sell this particular asset, we need a certain engineer from Germany to come and fix one or two things about this, then we can actually say no, the machinery should not be held for sale. Why? Because it's highly probable that the engineer might not come, and therefore the asset cannot be sold within the stipulated time period of 12 months. Okay, however, there are some exceptions to this rule where sometimes you discover that even if the asset cannot be sold within 12 months, it still might continue to be held for sale. To be classified as being held for sale. All right, and let us maneuver those exceptions. That's the purpose of this video. Okay, an example could be where the delay to sell the asset has been caused by circumstances beyond the control of the entity. Okay, delay is due to circumstances beyond the entity's control. Then we can say, you know, the asset should be um, should be continue to be held as uh, being held for sale. Okay, however, managers should be, I mean, supportive, or okay, should produce evidence that they are still committed to the sale of the asset. Otherwise, if they are no longer committed to the sale, then the asset uh, cannot be classified. The classification will see that the asset is being held for sale. Then the last one is actions required to complete the plan should indicate that it is unlikely that significant changes to the plan will be made or that the plan will be withdrawn. So the evidence should actually be available to suggest that there is no possibility that managers will change their position, will change their goalposts. Okay, they are determined to ensure that the asset is going to be sold. Okay, um, now non-current assets held for sale, presentation and measurement. How do you present them in the books of accounts and how do you measure these assets? Presentation. Assets and disposal groups, including associated liabilities, classified as held for sale, are presented on the face of the statement of financial position. So we expect to see under the current assets, these items should be shown. There should be a line, okay? They should appear as a line item, which is very visible. They should be very visible, okay, in the statement of financial position. They should be separately presented from other assets and liabilities. So, like I said, they should be clearly visible. They should, be given their own line. Normally, as current assets and liabilities, they shouldn't be offset. All right. So, if they are both current assets and current liabilities, then they should be shown separately. Okay, you need not to offset them. All right. Now, measurement. An entity must measure a non-current asset or disposal group classified as held for sale at the lower of. Please be careful about these terms. At the lower of carrying amount and fair value less cost to sell. So you can see that here the value in use is out of shape, okay, it's out of place, it's not considered here. All right, this is Ifrs 5. So we are looking at the carrying amount versus fair value less cost to sell. So we are saying the lower of the two. If the amount is being shown by cost less accumulated depreciation is lower than the fair value less cost to sell, then we should show the asset at the carrying amount. However, if the carrying amount is higher than the fair value less cost to sell, then we should show the asset at the fair value less cost to sell. Immediately before initial classification, measure asset per applicable Ifrs. Okay, we should measure the asset as per the applicable Ifrs. Okay, so it depends on which asset, what type of asset are we dealing with. For example, we might be dealing with an asset that is being measured in terms of IAS 40 investment properties, okay, where we have the cost model or the fair value model, all right, or we are having an asset which is being measured in terms of IFRS 9, okay, in terms of IFRS 9, or we might be having an asset which is being measured in terms of uh, IS 16, property, plant, and equipment. So we need to, first of all, satisfy the measurement criteria of the applicable standards, and then we determine our carrying amount. Because remember, the idea would be to determine the carrying amount. Then we measure that carrying amount against the fair value less cost to sell. Okay, so the standard will help us to arrive at the carrying amount according to the records, and then we then move on to the fair value. All right, so if the carrying amount is lower than the fair value less cost to sell, we then have to recognize the asset at the carrying amount. But if the carrying amount is higher than the fair value less cost to sell, then automatically we need to uphold the fair value less cost to sell. That's what this standard is saying. Non-current assets or disposal groups classified as held for sale are not depreciated. We don't want you guys to be overzealous and end up depreciating these assets. When an asset is being held for sale, it has automatically become a current asset. It becomes a current asset. Okay, that is it. Let's move on. Now let's talk of the disposal group concept. As already been defined, a disposal group is a group of associated assets, possibly with some liabilities, which an entity intends to dispose of in a single transaction. The measurement basis required for non-current assets classified as held for sale is applied to the group as a whole, and N, resulting impairment losses, reduce the carrying amount of the non-current assets in the disposal group in the order of allocation required by IAS 36. So the application of IAS 36 is still being relevant here. Okay, so we are saying the measurement basis required for non-current assets classified as held for sale is applied to the group as a whole, and any resulting impairment loss reduces the carrying amount of the non-current asset in the disposal group in the order of allocation required by IAS 36. Okay, that's it, ladies and gentlemen. Let's move on. Remember, we agreed that first of all we need to value the carrying amount in terms of an applicable standard. Okay, so if the assets were being held under IAS 16, okay, for you to arrive at the carrying amount, you would have lessened accumulated depreciation from the original cost, okay, and arrive at the carrying amount. And then if there were indications or indicators of impairment, you need to review, okay, to impairment review the assets first. Then if there is any impairment, then you need to allocate the impairment in the order as required by IAS 36, and we discussed about this allocation in our video, in this week 7 video on impairment of assets IS 36, please refer to that video for you to understand how the allocation is done. Then after that, you get the ultimate carrying amount. So that is the carrying amount you then have to regress against the fair value less cost to sell to see which one is lower, and that the lower amount between the two is going to be your value in terms of recognition of the disposal group value in the statement of financial position. I'm sure we are together there. Now let's try example seat core to see if we can have something tangible within our chest. Okay, so just pause the video and attempt the question on your own. Okay, as of 30 September 2013, Citco's property in its statement of financial position was property at cost, useful life 15 years. Okay, the examiner is trying to show you that you need to take note that the useful life of this particular property is 15 years. Don't ignore those figures. Also, don't ignore the dates. We are being told that at 30 September 2013, okay, the statement of financial position was actually showing property with useful life of 15 years, having a cost of 45 million and accumulated depreciation of 6 million. So which means at 30 September the carrying amount was 45 minus 6, which gives us 39. Okay, 39 million. That was the carrying amount of the property. Okay, and then on 1 April 2014, CIT decided to sell the property. Okay, but before we go there, remember I said the important value to calculate is the carrying amount. Okay, so if you are being told that this asset we are talking about, ladies and gentlemen, has been accounted for under IAS 16. Why? Because we are being told this asset is having a depreciable life of 15 years and there is accumulated depreciation that has already been deducted. Okay, so obviously you can actually see that this asset is being accounted for under IAS 16. So you then have to just use the available information to determine the depreciation per year. So what is the depreciation per year? We are told that this asset is for 15 years, okay, and it was costing $45 when it was purchased, 45 million. So divided by 15 years, so it means that per year they were charging 3 million as depreciation. Okay, so depreciation was 3 million. All right, so if depreciation was 3 million, how much was the current depreciation? So far they had accumulated depreciation of 6 million and we've accounted for that. What about up to the reporting date, that is 30 September at 30 September 2014, the property has not been sold. At what amount should the property be reported in this Citco's statement of financial position as at 30 September 2014? Okay, that is the reporting date. But let us see when they determined that this asset is now to be classified as held for sale. So that was on 1 April 2014. That's when they decided to sell the property. So you then have to worry about the depreciation from 3rd September 2013 to 1 April 2014. We are talking of 6 months. So this is 6 months period. Okay, that's 6 months. So 6 months warrant us to charge depreciation, which is just half year. Okay, half yearly. So the depreciation there is for 6 months, and this should be 1.5. So we have to deduct the 1.5 up to the date of uh, the decision. So 39 minus 1.5, we should get something like 37.5. So this is the carrying amount. We had first deducted accumulated depreciation and then depreciation for the year, and we are saying the depreciation for the year is only that depreciation before the asset has been classified as held for sale. The classification was done 6 months into the year, so we need to take account of the depreciation that has been suffered by this type of equipment or property. Okay, so that's why we are deducting further the 1.5. So the dates are very important in this particular exam. You must not ignore the dates. Then let's move on. The property is being marketed by a property agent at a price of 42 million, which was considered a reasonably achievable price at that date. The expected cost to sell have been agreed to 1 million. Okay, so the fair value less cost to sell, the cost of sale are going to be 1 million. Okay, but the fair value itself is 42 million. So we need to deduct the 1 million. Recent market transactions suggest that actual selling price achieved for this type of property in the current market conditions are excuse me. Okay, recent market transactions suggest that actual selling prices achieved for this type of property in the current market conditions are 10% less than the price at which they are marketed. So we are told that this item is being marketed at 42. So remember, we are now calculating the fair value less cost to sell. So the asset is being marketed at 42 million. Okay, but we are told that for it to be sold, it should be lower than the fair value. Okay, so multiply by 0.9. Why are we saying 0.9? Because we need to incorporate this statement that for it to be sold, it should be 10% lower or lesser. It should be 10% less. So 42 multiplied by 90. Okay, this is the price, the fair value now. This is actually the fair value for it to be sold. Okay, the market price or the agent's price of 42 million is actually a Wonderland price. Okay, it should be 10% lower. All right, that's what is likely to be attractive to the customers. So the fair value is now 42 million multiplied by 90. Okay, to incorporate the 10% deduction, less the cost to sell of 1 million. Okay, don't ignore that. So let us use the calculator. So we get 36, okay, 36.8 million. That's the fair value less cost to sell. Okay, but now we know the statement, the requirement is at 30 September 2040, the property has not been sold. Okay, at what amount should the property be reported in SIT's statement of financial position as at 30 September 2014? So this item at the end of the year was not sold. But remember, we can't charge depreciation for this asset. Okay, why? Because when an asset has already been classified, we classified this asset in April 2014 as asset being held for sale. Okay, so we are not expected to charge any depreciation on that particular asset. But the question is, at what amount did we consider this asset? Shall we have, or should we have considered it at the carrying amount of 37.5 or at the fair value less cost to sell of 36.8? We say that non-current assets held for sale are recognized at the lower of carrying amount and fair value less cost to sell. So which means the lower figure was the fair value less cost to sell of 36.8 million. So our answer should be C. Am I talking to somebody? Am I saving somebody's soul here? Okay, let us attempt this other question. You can pause the video, ladies and gentlemen. This is your time to shine. This is your time to shine. At 1 April 2014, Pilan owned a property with a carrying amount of 800,000, which had a remaining useful life of 16 years. The property had not been revalued. On 1 October 2014, Pilan decided to sell the property and correctly classified it as being held for sale. Okay, so you need to know from 1 April 2014 to 1 October 2014, how many months are we talking about? April, May, June, July, August, September. Okay, so that's 6 months, right? A property agent reported that the property's fair value less cost to sell at 1 October 2014 was expected to be 790,500, which had not changed at 31 March 2015. What should be the carrying amount of the property in Pilan's statement of financial position as at 31 March 2015, that is 6 months at the end of the financial year? Now try this on your own. I'm sure you are now rejuvenated. You have been motivated. You are now ready to shine. So please just try on your own. So as usual, let us calculate the annual depreciation. Annual depreciation. Okay, we are told that this equipment has a carrying amount of 800,000, and how many years left? We are told that 16 years left. So this gives us how much? 800 over 16. That's 50,000. Okay, and then from 1 April 2014 to 1 October 2014, that's 6 months. So this year depreciation for the year was 50,000 multiplied by 6 over 12, and this gives us 25,000. Okay, we have got the depreciation, that is 50,000. So we now know that the carrying amount of the equipment can now become computed. Okay, that's 800,000 minus depreciation for the year only. We are not going to consider the accumulated depreciation because that has already been dealt with. Okay, because here they gave us the carrying amount which had already been adjusted for the accumulated depreciation. because at 800,000 the remaining useful life was 16 years, which means if the asset had been a 40-year asset, the other years have already been catered for and they've been already considered. Now they gave us the 800,000 as the carrying amount, okay, which had already incorporated the accumulated depreciation. You need to listen to the question as you are being given. If you don't listen to the question, you end up answering another question and you get a zero. So you need to be very, very careful. Mr. Skumbuzo, Mr. Ronnie, please, when you are answering this, please be vigilant, okay? Be alert. Otherwise, you will score a zero. If you start to think these Acca questions is similar, you end up failing. Okay, you need to understand the question. Accountants should have the skill of being attentive to detail. Okay, now that is it. So 800,000 minus 25,000, this should be 775,000. So that's the carrying amount. Ladies and gentlemen, that's the carrying amount at the time when the asset was classified as being held for sale. But now the agent is saying that the fair value less cost to sell for this particular asset is 790. So you can see that you need to know the rules. Otherwise, if you don't know the rules, okay, the rules governing the measurement of these items, you are going to be thrown overboard. You need to understand the rule. So when you know the rule that an asset should only be recognized or should only be classified as being held for sale if its carrying amount is to be recovered from a sale rather than continued use, and it should be measured at the lower of carrying amount and fair value less cost to sell, then you are going to fail. If you don't know that, you are going to fail. So in this case, which one was the lower amount between the carrying amount and the fair value less cost to sell? Obviously, the lower amount was the carrying amount. So the answer there should be A, 775,000. That was the lower amount. Okay, let's proceed. Now, ladies and gentlemen, we must be accustomed to this template. Okay, pro forma disclosure for discontinued operations. Key provisions of Ifrs 5 relating to discontinued operations. Classification is discontinuing. Okay, you need to separate results of continuing operations from discontinued operations. Okay, so the first part of your income statement should actually be titled continuing operations. Then you list your revenue as normal, cost of sales, gross profit, and so forth, up to the profit for the year from continuing operations. Then you continue and say discontinued operations. Then here we only want the profit for the year from discontinued operations. Okay, this is added to the profit from continued operations and we get profit for the year, and then you then do your attribution, okay, where you say profit attributable to owners of the parent and to non-controlling interest if n. That's a template for a group. Okay, now remember, a discontinued operation is a component of an entity that either has been disposed of or is classified as held for sale and represents either a separate major line of business or a geographical area of operations or is part of a single coordinated plan to dispose of a separate major line of business or geographical area of operations or is a subsidiary acquired exclusively with a view to resell and the disposal involves loss of control. Okay, that's the definition of this disposal group. Now, the takeaway. Profit or loss for continued and discontinued operations should be reported separately, as we have indicated here. This is profit from continuing operations, and then this one is the profit from discontinued operations. So we are talking of profit or losses here. Okay, don't say that now we discovered that it was a loss, so there was no point of separating, blah blah. You will fail. The word profit there is loss. Okay, we are talking of profit or loss. This is a profit or loss statement. Okay, so when you are seeing the word profit there, sometimes it could be a loss for the year. Okay, don't be hoodwinked by that simple matter. All right, is there any other example which we can talk about before we close our case? Okay, this one is from a past exam question, and we need to then know what to do with that. It was part of a long question, a very long question, and that item number 5 was a note to that question, and it required some adjustment to the financial statements given in the exam. So you then have to, adjust these to make, you need to know how to make this adjustment. So Ifrs 5 is not just a simple standard. You need to understand what is going on. Otherwise, we'll find you writing this paper over and over again. Okay, so the information is the above balances, I'm saying this was a note through the information given in the question. Okay, so I just extracted the note only because that's what is relevant to this lecture. Okay, the above balances contain the results of Tourmalet's car retailing operations, which ceased on 31 December 2002 due to mounting losses. The results of the car retailing operation, which is to be treated as a discontinuing operation or discontinued operation. Sorry, let me look for a pen that is a bit visible. So the results of the car retailing operation, which is to be treated as a discontinuing operation for the year to 30 September 20x3 are, so that's the information for this particular department which has been closed down. The sales were this much, the cost of sales that much, operating expenses that much. Okay, so you now know, ladies and gentlemen, that the result of these guys, the discontinued operations and the continuing operations, they have to be separately presented. However, we give precedence to those operations which are continuing first, and then we only need the profit element. Okay, but we are told that in the balances you are seeing for Tourmalet, okay, the above balances, so the above balances were including these items here. This is the meaning of this statement. The above balances contain the results of Tourmalet's car retailing operations, which is ceased. So in the sales figure, there was the sales for the discontinued operations in that one and that one. So if the question says adjust, you now know that if you are given a question and in the question you are told that the sales figures, the cost of sales figures, the operating expenses figures you are seeing contain the results or contain the sales, the cost of sales for a discontinuing operation, you then have to know that you need to deduct those items from those figures, because these figures, we only need their ultimate profit. Okay, the profit from the discontinued operation should then be the only line item we are going to see. Am I talking to somebody? Okay, so you need to remove them and then do a separate income statement for the discontinued operation and then get the ultimate profit, which you then have to bring to the group income statement. Am I talking to somebody? If I am doing that, then say amen. Okay, the operating expenses are included in administration expenses in the trial balance. Okay, so these guys are included in the administrative expenses or administration expenses in the trial balance. Tourmalet is still paying rentals for the lease of its car showrooms. The rentals are included in operating expenses. Tourmalet is hoping to use the premises as an expansion of its administration offices. This is dependent on obtaining planning permission from the local authority for the change of use. However, this is very difficult to obtain. Failing this, the best option would be early termination of the lease, which will cost 1.5 million in penalties. This amount has not been provided for. So let's compute the results of the discontinued operation. So results of the discontinued operation. Okay, let me plug in the power. My machine is now misbehaving. Okay, so we are having the sales. The sales is 15,200,000. Okay. What's going on my machine? Sorry, I wanted to put the denomination. Okay, so we are saying 15,200,000, and the cost of sales are 16 million. Okay, remember this operation was being closed because it was a loss-making business. Okay, the operating expenses that's how much? 3.2. Then we are told that the best option would be early termination of the lease, which will cost 1.5 million in penalties. So lease termination costs are considered what? Finance costs. $1.5. So how much are we recognizing as the profit or loss for this continued operation? Let's use our calculators. 15.2 million minus 16 million minus 3.2 million minus 1.5 million. That's negative 5.5 million. So this is the loss from discontinued operation. Discontinued operations. So this is why I said the word profit, don't be shocked when it becomes loss. Okay, sometimes you just have to write loss from discontinued operation, profit from discontinued operations. Okay, so that was the case. Okay, so when you are now given this question, okay, if you were required to then present the income statement for Tourmalet, for the continued operations of Tourmalet, you then have to ensure that you deduct these figures from those sales figures for the whole company. And then after you determine the profit from continuing operations, you then have to then put the loss from discontinued operations, this figure, and you find out that you have scored all the marks. Okay, so ladies and gentlemen, those are my contacts. If you feel like you need an Acca tutor by your side, please just get in touch with me. All right, just get in touch with me. I'll be very, very ready and interested to assist you in your studies. Okay, so don't be shy. All right, nobody is a guru in accounting. Okay, nobody's a guru, so we just have to assist one another. Okay, sometimes I also err. Okay, to err is human. Sometimes I present information incorrectly. That's how we learn. Okay, so you just have to put your comments in the comment section below this video, and I would improve. If you do not comment how I'm doing the coaching, then I won't know if I'm doing things right or wrong. Okay, so I need your feedback, and let's share our skills, let's share our knowledge. By so doing, we would make we will make the world a better place for all. All right, so until next time, ladies and gentlemen, let me sign out. Okay, so continue to feel excited. Okay, I'm going out. Thank you.